Hey everybody, I'm Christopher Green. You're tuning into AMTV Alternative Media Television. We had a huge rout in oil markets today, as well as U.S. stock indices, with the Dow Jones Industrial Average ending around 130 points to the downside. In a yo-yo day, the VIX and volatility is up. Oil prices, though, in focus, with crude oil, WTI, Western Texas Intermediate crude, dipping below the psychological level of 50 to 47. And Brent crude trading near 50 itself. Pretty astonishing, but of course all this was depicted and has been explained in countless AMTV videos where I go into great detail how and why oil prices would be artificially manipulated lower due to the fact that America is at war with the Russian bear, the vodka-drinking bear that makes up the Putin government. This is of course why we've been playing geopolitics in the Ukraine. Anyone will tell you, analysts especially, that oil below $100 a barrel, below $80 a barrel, are catastrophic for the Russian economy, which is heavily dependent on oil exports. It accounts for over 50% of its GDP and its economic growth. They use it to subsidize things like housing, energy, and food, of which Putin cannot do for his people if oil prices are trading at these gross levels. Of course, Saudi Arabia also has a self-interest as they're attacking foreign competition here in the United States, U.S. fracturing, which has recently overtaken since 2008 and 2009 as the leading producer of oil in the world. So all of this is happening, and very key today was a huge movement of money, what people would call the smart money, institutional investors fleeing to what they perceive to be a riskless asset, which I think is pretty funny. The 10-year bond here in the United States dipping below a critical level of 2% on its yield. We're also seeing this in Germany, of course, with their 10-year, the equivalent, the Bund, at just roughly 0.5%. Angela Merkel and the European Union indicating over the weekend that they're preparing for a Grexit. They're preparing for Greece to potentially exit the European Union. And now people are asking what countries will be next, who will be and what will be the other first movers. Will it be Italy? Could it be Portugal? Could it be Spain? How and why will this unfold? Of course, we're seeing zero growth in the Eurozone, negative interest rates, and they're actually expecting quantitative easing in Europe. You see how Europe is in cahoots with the United States. When they end quantitative easing here, they start it in Europe. What's interesting about this movement of money and also declining interest rates in the bond market, it's contrary to pretty much what every pundit has told us and has told you, namely on CNBC, post the 2008-9 bailouts. They said when quantitative easing to infinity ended, that rates would inevitably rise after the Federal Reserve added $4 trillion onto its balance sheet and an enormous, can't ever pay back $18 trillion plus national debt, that rates would eventually rise. Of course, none of this is happening because the world is in a global depression and we are at war. Again, it's why there's this geopolitical chess game in the Ukraine. Again, Russia transferring much of its exports of natural gas and petroleum products through the area, through the region, to a heavily dependent Eurozone and European Union. Historians will tell you that Russia, with their pseudo-control of the Ukraine and the Crimean Peninsula, where they base their navy, their Black Sea fleet, is a difference between Russia being an empire and simply just a country. As the BRICS nations power up and gear up to move away from the petrodollar with the establishment of the Eurasian Union, and the last remnants of U.S. supremacy, and this battle is unfolding before your very eyes at this given moment. Key indicators and key things I'm looking at, key levels in oil, I think it can precipitously drop much, much further, especially in the short run. I think we will see more violent moves. I'm actually personally, although I can't predict the future and I don't have a crystal ball, think that we could see oil at $35 a barrel. The Saudi elite have mentioned that they can withstand price cuts and they're going to continue to flood the market with supply all the way down into the 30s. I even heard a Saudi elite member from the cartel say today that they could withstand $20 a barrel oil prices. The optimists will tell you that this is short term, at least, good for the consumer, but to me it's a leading indicator and it's also indicative of just how terrible this global economic environment is, and also showcases this economic warfare currently taking place. Again, Saudi Arabia and the United States in cahoots. We saw the same thing before the outbreak of World War II, an embargo on Japan that led to the bombing of Pearl Harbor and Honolulu. Ukraine is now this new chess piece. Oil, a central focus to all of this. It's why the oil markets are been artificially manipulated lower to attack Russia, to bleed Vladimir Putin, his government, also to specifically bring Iran and their nuclear program to the negotiating table and prepare for all-out war. This is what is headed. This is what is coming. This is what I believe we are already engaged in. Again, keep your eye on oil prices, folks. It's going to get much worse. I'm Christopher Green. Get it out everywhere. Make it viral, hard hitting it in your face, and click the link below to support our sponsor.